So we've taken the time. We've, after so many webinars of talking about the central banks and everything else, I've decided to say it's all about the central banks at the moment. Okay, we have FMC this week. We have the Bank of Canada this week. I've covered out the FMC yesterday. So the Fed, actually not the FMC, the Fed. Covered up the Fed yesterday. They as I say, the replay is live on YouTube, so go and watch it. But we had the Australia CPI today came in lower and lower than expected. In some instance, not, it is lower than what was expected, but it's not huge move down. Okay, so just everyone knows. And then we have the Bank of Canada interest rates decision. What should we do? Should we continue to short Canadian dollar? Shall we, long it, because that we don't know what they're going to do. So we're going to be having a look at those two topics today. But before we start, as always, I will mute myself, turn off my camera, and I will put the risk disclaimer in. So you guys have a read. I will give it a minute, have a read, and then we should be ready to start. Okay, I will be back soon. Okay, I'm back. All right, so risk disclaimer is done. Let's get into the content now. Let me get out of these. There you go. So I've just searched up Australia CPI on Google, and these are the results I got. First is CPI rises 0.2% in December 2024 quarter. But what is most important, and I've seen it, is right here. Let me just change the column. It's this news right here, okay? This is really interesting. We've seen the February rate cut likely as inflation hits 4-year low. Australia underlying inflation rate falls to 3.2% to boost a case for RBA rate cut next meeting. Surprise inflation figures boost chance of interest rates cut in February. Consumer price, this is not one, but 3 of the main 5 news. So basically, 70%, okay, 75% of the news, the headlines here, are talking about a cut into the next month in February. Okay, we don't have the RBA meeting this month, if I'm not wrong, in January. We will only have in February, and the inflation has fallen to 3.2% in a year-over-year. And as we knew, last month in December, we had the RBA meeting, and they say that they are not really anything in and anything out, meaning that yes, if there is a chance to cut, definitely we would cut, and if there is not a chance to cut, we could even hike. So they are literally on top of something. They're not falling to one side and not falling to the other side. So they're just as on a perfect balance, I would say, the RBA at the moment. Okay, let me delete all of these. So with these, a lot of questions come up, right? If central banks, like including the RBA, closely monitor the inflation, and that's where they determine if the interest rate decision will be hiking or lowering. If inflation is low, majority of the cases, that's not 100%. Okay, so majority of the cases, if inflation is low, the RBA may decide to keep interest rates steady or even do a 25 basis points cut, 50 basis points cut, as we all know. Okay. As on the other hand, if the inflation continues to grow, central banks tends to put more pressure into the inflation, hiking the rates higher. So we see in the recent months, Australia has been experiencing a cooling economy. And it wasn't only this release, it was the past releases as well. And I've just touched base on the Australian Bureau of Statistics I will send this website to everyone in the chat. So Australian Bureau of Statistics. There you go. So you can access that with me. You can read it later. That's not a problem. It was released today, of course. But we've seen that the last CPI report just today showed the consumer price increase at a slower pace, and which caught the attention of traders and investors and even the central bank last month. This, fueled some speculation that the RBA may not cut this February. But then we have today the inflation coming in lower, and that is speculating that there is a possibility of they do a cut into February. If we go into all groups CPI Australia quarterly and annually movement, we can see right at here on this chart that that the inflation, let me just drink some water, guys, sorry. That the inflation is falling, okay? So we see that from December 2022 all the way down to here, we have pretty much fall 5%, okay, 5.4%. And that's pretty good. That's a pretty good decline. We did add some into March to June. We had a little uptick of 0.2%, but inflation is on a decline, okay, showing that is very close to the target. If we look from December 2014 all the way to pretty much March, April 2021, we've been in target, okay, we've been in target, and there was really nothing to be afraid of. Then we had the COVID and everything started. Now we're coming down again. So from December 2022, if we go into the chart of Aussie dollar, go here, Aussie dollar, and then we go in December 2022. Let me put into a daily chart. I think it's faster. Okay, 2022. August, September. Someone's trying to join us. September, October, November. Oh, that's 2022. Oh, that's still 2024. Sorry. 23, April, February, and November, December should be here. So since here, when inflation starts to decrease, if we zoom out, we can see that the Aussie dollar has fallen, okay, has been falling very sharp since there. This is when the inflation starts to decrease. So if we come back here and we look at the December 2022 down all the way to here to 2.4%, made a negative impact into the Australian dollar, okay, pretty simple. Now, should it continue to drop? Should we continue to short the Australian dollar? My quick and simple answer is yes. And my target is at 60 cents. Okay. That's where I'm targeting. Most likely this move will happen pretty quick, because if the central bank lower the rates, okay, if the RBA, the Reserve Bank of Australia, coming in and lower the rates by 25 to 50 basis points, this will fulfill the movement that, yes, okay, they have inflation under control, and just now they will do a 25 basis points cut. Perfect. This will pretty much take everyone off from Australia and put it out to probably New Zealand, Japan, or even US dollars, okay? Now, the other interesting thing to see is the group trim and mean. Sorry, not this one. goods and services. No. Where it is? Oh, it's not on this one. It's this one. Sorry. Okay, so the weighted average of 8 capital cities in Australia, and we can see the changes from September quarter of 2024 to December quarter 2024 to December quarter 2023 to December quarter 2024. We did had some big changes, massive changes, but some of them hasn't been big ones. So like communication from 0 to 0.5%. We saw a big change on education. We've seen 0 here and 6.5 here. So that's a big change. Not much changes on to the, what was the other one? Oh, sorry, the big change was on housing, okay, right here. Because if everyone knows, the real estate market in Australia is crazy at the moment. We've seen rental prices is skyrocketing. Like since COVID, I think we used to pay, before COVID, we used to pay maybe $600 per week for 2 bedrooms. Now you can't find anything into a good location, of course, less than $850. So that's a $250 addition into week. That's a weekly. So that's $1,000 addition to the population spending per month, of course. So then the questions comes in, like the prices of living are getting expensive. So shall we be worried about it, or just go with the flow? That's another reason why I'm looking to short the Australian dollar, because yes, population is feeling they're consuming less, they're controlling the money more than they used to be controlling. Okay, so my opinion is that yes, most likely we will continue to see the inflation come down, plus we may have a 25 base points cut from the RBA into the February. And if they do that, then what will happen is, let me have a look into the RBA rate track. If we look at the RBA rate track, the trading day accept. So 28th January. So there's a 84%. Let me send this to everyone because that's a pretty helpful link. So RBA rate tracker. So you can use these same as the CME. Okay. So for those who don't know, CME is for the Fed. So CME group, interest rate watch, the Fed watch, we can see the probability is 99.5% of no changes into 29th of January, so tomorrow. But for the RBA, we have 84% possibility of a decrease of 25%. Sorry, 0.25%. So 25 basis point. And there's only 16% believing on no change. Okay. And that's the forecast as of 28th of January today. So they're looking to stay at 433 and then 426, 413. So there's, pretty much 25 basis points cut on every single meeting. I don't believe so, but that's what the market is predicting. Now, coming back to Aussie dollar. Yes, I do believe that this is on a good spot to be shorting Aussie dollar. Okay, maybe you don't want to short against the Australian. Maybe you don't want to short Australian against the US dollar. But if we look at the 15-minute chart, let's say for instance, let me just come back here. We're having these sort of moves that are breaking bottoms and forming higher tops. So most likely I'm believing that we will continue to have this move until 60 cents. Okay. So yeah, maybe a short here with a stop loss a little bit above that one and a take profit on the 60 cents would work well. Especially if the RBA cuts and have a more like, inflation is falling. We believe that inflation is falling. We've reiterated and we've made a new projection of the forward prediction of the inflation, and that inflation projection is lower than the past one. So those types of things will make the Aussie very, very weak. Okay. Is everyone good? Everyone following up? All good? Okay, cool. Now, next topic. Bank of Canada. Ooh la la. So let's have a look at US dollar CAD. Okay, first of all, USDCAD. So if we put into, let's say, 1 hour, maybe it's better. Just zoom out. Remember, I've mentioned it that Aussie CAD would be a good long trade to have on a portfolio, especially shorts in CAD. Don't need to be exactly against the US dollar, but a potential short the Canadian dollar would be really great. Okay, especially because of the 25% tariff, etc., etc. I've explained it already. If you haven't yet watched, go back into the YouTube, the webinars from last week. What day was that? Was on the 24, if I'm not wrong. Let me check. The 22, 23, and 24, and the 15, 16, and 17. All of those 3 days, I've talked a lot about the policy that Trump's trying to implement through Canada and Mexico. And it's a big take. It's really hurting the Canadian dollar. So most likely, the Bank of Canada will do a 25 basis points cut. Okay, so on December they've done a 50 basis points cut, October another 50, and then September 25, July 25, and June 25. The possibility of doing maybe a 25 to 50 is pretty high. Okay. I don't believe that they would be looking to maintain the interest rates as it is, because interest rates at the moment is at 325. The most interesting scenario for them to do at the moment is getting back to 3, at least 3, and then 275, and then 25, and then 225, and then 2. Okay, so maybe another 5 cuts. It's that what we would be looking at for the Bank of Canada. Now, again, it's very important to be always looking at the rate statement and not only what happened on the rates, because we all know that the rates, whatever they hike or cut or hold, the market is already expecting that. So if the market think about this, right? If you're expecting something, you're not surprised. Okay. And if you're not surprised, you don't have big reactions because you already know that something is going to happen, right? So let me try to contextualize that by saying you turn 18 years old, okay, and you know that your dad always give you $100 on when you turn whatever age you turn. So you already know that he's going to give you again another $100. You're like, oh, okay, yeah, my dad's going to give me 100. And you start to plan, what are you going to do with that 100? Not even having that money, but you already start to plan. And then comes a day, and then your dad hands it over the $100 bill, and you're like, okay, cool, I already knew that's going to happen. And then when you turn again in the next year, you already know that you're going to get $100, right? But actually, you don't. So then you'd be like, oh, wait a minute. I'm supposed to get the $100 where the $100 is. I've been getting since my first years old. and I have already $1,100. Now I want to go to $2,000. Where is my $100? Well, you already turned 18. I'm not going to give you another $100. You can go and work by yourself now. So you got surprised and you're like, oh, wait a minute. I already had plans to do with that already. Everything was sort of ready to go. You can't do like this. Well, that's exactly when the news hits the market, when a data comes up from the market. Basically, if it's already expected, the market already know what's going to be doing. The market's going to be longing, going to be shorting, going to be neutral. They already know where the market will be going. But then if the data point gets surprised, if the data point surprises the market by 100% difference, so if everyone was expecting 25 basis points cut and comes in to be a 50 basis points cut, then wait a minute, that's something I wasn't expecting. That's too strong, right? They're being very aggressive, and then the market just falls very quick. Now, if the opposite, they react more positively, let's say by 50 basis points hike in terms of not doing 25, then yes, the market will react positively. Now, majority of the traders forgot that events news trading is it's not about the expectation. It's about building a sort of high frequency entry, going in and going out, and being able to manage your risk accordingly, because the market moves so fast on those data releases that sometimes you don't even have control. But are they really good to make quick scalps? So it's really, really decent movements to do scalping trading. And those are the moments that I would like to do some scalping. So if we look at here into US dollar CAD, let's say the Bank of Canada comes in and do a 50 basis points cut. Oh, sorry guys. Woke up very early today. But let's say they do a 50 basis points cut and everyone was expecting only 25. That's a big surprise, right? What will happen with the Canadian dollar is it's going to be very weak. So we can long USDCAD, because at the same time we're longing USDCAD, we're shorting the Canadian dollar. So then US dollar CAD will go up, and then we go and long it, and then we close our positions, and then we made some profit, and that should be it. So my opinion is a 25 basis points cut from Bank of Canada, and most likely USDCAD will continue to go up. Now, there is other possibilities that you can trade the Canadian dollar. You don't have to only trade USDCAD. You can trade CAD JPY as well. So for instance, if we go to CAD JPY, we can see that the market is somewhat reacting lower. Okay, it is somewhat consolidated, but it's going lower and lower because of the Bank of Japan. So I can see the CAD JPY coming. I think I've mentioned about this area here, but most likely below, well, not below, but somewhere around this area here. There we go. So we can come down at this area around 106, yeah. We can come down to 106 on CAD JPY. That's another possibility for you to be trading, okay? You don't always have to trade the US dollar. You always have to trade US dollar against euro, US dollar against CAD, US dollar. No, you need to find weaker or stronger pairs to be trading. And that's what I've meant last Thursday, if I'm not wrong. Yeah, last Thursday, I've released my strategy. So if you haven't had time yet to look at my strategy, I highly recommend. You can just go at acy.com, and then you go into learn, and then you come to education, and then you click in my name, Lucas Santos, and then you can come in here, how to trade Forex using fundamentals with an edge. And that's exactly what you should be looking at, okay? The whole explanatory thing is right here, okay? send to you guys. Strategy. There you go. So you can have a look at this one as we finish the webinar. For the euro, where's the Finlogics? For the euro, most likely I would, for the Australian dollar, most likely I would be looking to short against the US dollar. I think it's a good risk reward. But if you already have so many positions on US dollar and want to diversify your portfolio, let's say, I would be looking to short Australian dollar against the euro. Okay. So I would be longing Euro Aussie. So if we come to Euro Aussie right here, we can see the move happening. Let's go for the 4 hour. Or even Pound Aussie. Yeah, Pound Aussie is good, but Pound is a little bit weaker than the Euro, so I'm not too sure. But yeah, yeah. So if it comes back somewhere here, we'll be looking to long Euro Aussie until 166, 168. Sorry, 168.6. But that should be around those levels. As I say, I promise it would be a quick one today. We don't have much. I've talked about the CPI. I've talked about the bank of interest rate decisions. And I've talked about yesterday about the FOMC as well. So if you miss it, it's live on YouTube. Go and watch the replay. I think Aussie dollar will most likely continue to fall. And I do believe on a short Aussie dollar against the US dollar, or even a long on Euro Aussie. And the Bank of Canada interest rates decision most likely will be a 25 to 50 basis points cut. I can't, sort of see where wouldn't they cut, because they can, and inflation is coming down, and they want to reduce the rates to 2% as soon as possible. So there's definitely room for that one as well. Guys, thank you so much. I'll see you guys tomorrow from 5 to 6 p.m. again, and I hope everyone can catch some good trades tonight and tomorrow morning. See you all. Take care. Have a good one.